Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Wednesday, the 15th day of August, 2012, and this is the daily report for gold and silver. Moderate showing in the precious metals markets to the upside, quiet summer trading day. As you can see, current print on the screen, anywhere between 1601 and 1602 in terms of gold. It has had a low though. It dipped to 1588 in intraday trading last night, and the high 1607. Silver also higher to unchanged on the day. 2778 is the current print that you see on the screen, with a low of 2741 and a high of 2813. Traders, although we are witnessing fairly quiet trading right now in the marketplace itself, interesting news has surfaced, and this is according to a couple of different sources, including Bloomberg as well as Barron's. But first off, hedge fund manager George Soros has tripled his stake in the most popular U.S. gold fund, and this is during the second quarter. And the disclosures itself came out last night. Soros Fund Management held 884,000 shares of the Spider Gold Trust, and that's up from 319,000 on March 31st. Not to be outdone by Soros, Paulson is also in the market, and he is the single biggest reported holder of Spider right now, holding 21.8 million shares versus 17.3 million in the previous reporting period. Of course, realize there is a lag behind that. Technically, there can be no doubt we're caught right in the middle in this market right now. Support, strong support, 1580. We've got that right in here, as you can see. You also can see a couple of series of lows that we hit. We are looking at our daily chart, of course, and you can see that, again, we are getting this series of higher lows right in here. You can see this low here, of course, and then the next set of lows that we get are higher. That has been happening really all the way up this support line right in here. And what is happening is, although we've got this flat top, and this flat top is what concerns me, of course, 1640 on the top, 1625, as you can see, these are the highs in the market. I'm really looking at the bodies. When you consider the bodies of these daily candlesticks, let me try to kind of mark that in so we can go to the lows of the body. As you can see, you're really looking at, about 1625 right in that area. You can see that these tops are right here, 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 and here. That's providing absolute resistance. At the same time, we have real strong support at 1580. And it does appear as though it's been trading around that $1,600 mark. We've gotten dips intraday. We had this one dip to 1588. You can see that right in here. But at the same time, buying came into the market and did move the market back up. We are looking at silver as it currently trades, 420-minute chart, Heikin Ashi. We charted out over the last few days different levels of support that I would look for the market to go to, with major support really at 2760. You've got a couple of lows here, 2750 right here, as well as here. But to give you an idea really just how quiet this market has been, as I go and compress this chart, what you're going to see is that as this market came down, this is that secondary top, of course, here at 38. Market meanders down. It's very, very apparent when we look at it this way, and I'm going again from the bodies, you get this really strong level of support just below 27. You've got really strong resistance, and the resistance can be seen really with this triple top in here. At the same time, the market, now you see these series of lines that we've been charting, is really caught up in this incredibly small trading range itself. My sentiment is we'll have up days and down days through the market over this week, but we're not really going to see some terrific movement one way or the other. I think it's still going to maintain and continue to trade in this defined narrow trading range. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.